Wow, this recording is being slow. There it goes. Okay. So what you're going to do is payroll. And so you have due on the 15th payroll. Remember, these all end up being 2000, 2001. This is Johnny Smith's gross pay. So these are all their gross pays. This is Desiree's, Jessica's, Alfred, and owner pay. So this is what you're going to take as your pay as the owner. Okay. Up here is your federal income tax for your employees and owner pay and federal income tax percentage. Who knows what Social Security is? You remember what Social Security is? The tax rate? What's the tax rate for Social Security? Anybody remember? 6.2%. No, don't do payroll because it's going to want you to pay extra. Retail. You do LLC. Yeah. Okay. So Social Security is 6.2%. Medicaid is 1.45. 1.45%. Okay. So you need to know those. So here, what you're going to do is you're going to come hit add journal transaction. Okay. And I'll show you real quick. I did one already, and then we'll go through another one. So here we have Johnny Smith's. Okay. We have his salary. Okay, we're going to debit that account. That's the amount that he's getting paid. Okay. We're going to debit the employer tax. Employer tax twice because remember we have to pay our share too. And then employee payroll we're going to credit because that's the liability account. So the amount that we end up debiting here is going to end up going into our liability account. And then cash is this is the amount that Johnny's actually going to get on his paycheck right here, $700. Okay. And so the first thing you need to do is go to your chart of accounts, go to liability, and go due for payroll, and you're going to add in employee payroll. Okay. Now you can manually enter that one in because if you paid for it, then they'll add that. That's a feature they'll add in. Okay, we're not doing the pay feature, so you're going to add in. You'll click new account. Pay for payroll, due for payroll, employee payroll. You can add account ID number if you want. This is where, remember, I kept on telling you in class, on these systems, they don't really have account IDs numbers. You can go and create them if you want to, and be specific. And as you do more and more, you can go and do that. So we come back to transactions. And what we're going to do, we're going to do add a journal transaction. And we're going to do Deseret Ray. DS or D? Okay. And so we know her total pay, her gross pay is going to be $675. Okay, so we need to figure out her federal income, her Social Security, and Medicaid. Now there's no health insurance, so we don't have to worry about health insurance being where we can do the deductions. Because remember, with health insurance, if someone pays health insurance, the federal income tax is deducted after the health insurance, but Social Security and Medicaid is deducted on the actual gross before health insurance. So since we don't have health insurance, we're not going to be concerned about that. So we can actually just add up all her taxes. And so her federal is 0.5%, 0.05%, plus 0.062 for Social Security, plus 0.0145. And that's going to be the tax for everybody. Okay. We're just making it generic. We're not going to be going through and finding the exact tax rate. It makes it a little more complicated, but most in normal situations, you would have, if you see there, you have Jessica. Jessica's would be higher or be lower tax rate than Johnny's, because Johnny gets $900 a week roughly, versus Jessica's only getting $400. So Johnny would most likely pay slightly higher depending on his deductions. Okay, so you will take that and times that by the 675. That's going to give you Deseret's total taxes. Okay, and then subtract that. I rounded it up to 8539 minus her 675, and that's going to give you her net pay. Okay. So we come down to expense payroll. There's a gross pay and there's a salary and wage. If you want to do the gross, you can also do a gross, but then you'd want to put in the total, the whole 765. And then we need to where's the expense? And really, there would be two of these. I didn't go and create. We should have an employer and an employee. But the concept, that can be debit. Oh, yeah, this one's gonna be debit. Sorry. No, since we did gross pay, we don't have to do that one. We can go right here, and we can put the credit here. payroll, and you're gonna have to enter the exact same thing. For your employer's payroll tax, and then now we have to show that we're moving it to our liability, right? Because we go into accounts payable. And so we have our taxes, right? And accounts payable. And then we just need to add in no, the cash on hand, which is the amount that we're paying out. And then here you put in descriptions. And everything balances out. We have a difference of 0. Our credits and debits balance. Okay. And then make sure to change the date. Yeah, changes 2025. Yeah, on the mouse on this side. There it goes. And then this is going to do the 15th of January. And you write up here if you want. Payroll. Okay. So there we have all that, we're recording her gross pay. We're taking out her taxes, right? We're including our taxes. We're putting our taxes in aside, right? We're putting it in the payable account because we don't have to pay that yet. And then here we're that's the cash that we're actually paying her. And when we did the math, her balance of cash should have been $589.61. That's what her paycheck should have been. Okay. When you have all that done, you hit save. And this is the total amount that is actually being debited, affecting, since we're actually going to be, we have to pay our portion of the taxes as an employer. So that's including our portion. Okay. So this is how we get around without using the, paying for the feature of payroll, since they charge you $20 a month.